Good evening, everyone. This is Rudy Stirk, Senior Manager of Marketing Innovation for the Connecticut Green Bank. Thank you all for joining our presentation tonight on the Green Liberty Bonds. I have the privilege tonight of being joined by a number of people from our organization. Lonnie Reed, Chair of the Connecticut Green Bank, Brian Garcia, President and CEO, Bert Hunter, Chief Investment Officer, and Mike Yu, Director of Clean Energy Finance. We're also joined by our underwriters, including Al Quintero and Brad Friedman of Ramirez Co, and Eric McKean of Stifel. We are excited to bring the Green Liberty Bonds to market in honor of the 50th anniversary of Earth Day, which was celebrated earlier this year. First, we have some housekeeping items to address. The disclaimer on the screen is for the speed readers. For the rest of us, a few key points. Under no circumstances shall the information in this presentation constitute an offer to sell or the solicitation of an offer to buy, nor shall there be any sale of securities in any jurisdiction in which such offer, solicitation, or sale would be unlawful prior to registration or qualification under the securities laws of any such jurisdiction. Offers to purchase securities may be made only through a registered broker-dealer and through an official statement. This webinar is being recorded, and the slide deck and recording will be posted to our investor relations website, www.greenlibertybonds.com. We encourage everyone to read the full disclaimer when posted. Lastly, we have saved time at the end of this presentation for questions and answers. Please submit your questions through the GoToWebinar interface throughout the presentation, and we will answer them at the end. With those items covered, and before we get into the details of the Green Liberty Bond offering, we wanted to introduce you to the Connecticut Green Bank and discuss why we have created the Green Liberty Bond. So let's start with who is the Connecticut Green Bank. And for that, I'll turn this over to our President and CEO, Brian Garcia.
Good evening, everyone. We're excited to be with you this evening. Many of you listening today from Connecticut know who we are. We are the nation's first green bank. The Connecticut Green Bank was created by a bipartisan act of legislation in July of 2011. We focus on providing families and businesses with the capital they need to finance clean energy improvements to their homes and buildings. We are supported by a system benefit fund from ratepayers of Eversource Energy and United Illuminating through a clean energy fund surcharge that amounts to between $7 to $10 per household per year. We're also supported by regional cap and trade allowance proceeds through the Regional Greenhouse Gas Initiative, or RGGI. Those are our state support resources. We also receive funds from the federal government through competition within various agencies, like the Department of Energy or USDA, or through formula allocation in the case of the American Recovery and Reinvestment Act. We're also advocates of a National Climate Bank Act that takes the Connecticut Green Bank model to the rest of the country. And now, we're increasingly going to be supported by the people, families of Connecticut, and citizens of our country through the steady and ongoing issuance of Green Liberty Bonds. Let me turn to our chair, Lonnie Reed, to speak to the mission and goals of the Green Bank. Lonnie.
Thank you so much, Brian. Hello and welcome, everybody. The mission of the Connecticut Green Bank is to confront climate change and provide all of society a healthier and more prosperous future by increasing and accelerating the flow of private capital into markets that energize the green economy. We achieve that mission through three goals. First, we invest the resources we receive in a way that mobilizes multiples of private capital investment into the green economy of Connecticut. Second, by increasing investment in the green economy of Connecticut, we strengthen our communities by making the benefits of the green economy inclusive and accessible to all individuals, families, and businesses in our state. And lastly, we are pursuing investment strategies to advance and transform markets for green investing. The Green Liberty Bond is an example of that. Okay, let me turn it back to you, Brian, to give us the vision statement.
Excellent. Well, we recently issued our comprehensive plan, which is our organization's guiding document with the title Green Bonds Us. Today, we're talking about a green bond, the Green Liberty Bond, an investment instrument to provide capital to projects that confront climate change. But we don't just mean the Green Liberty Bond when we say Green Bonds Us. We believe that protecting the environment by confronting climate change can also bring us together. Green, the environment, bonds us, unites us. The environment unites us. Green bonds us. Our vision is a world empowered by the renewable energy of community, or said another way, a planet protected by the love of humanity. And we believe this theme is present in all the work we do and the lives and communities we impact, and that through this energy and love, we can make a difference against climate change. Lonnie, could you introduce the types of programs we provide to Connecticut families and businesses and speak to the impact we're making in our communities?
Certainly. To make a positive impact, the Connecticut Green Bank provides families and businesses with access to capital to finance clean energy on their properties or within their communities. Working with local companies like small business energy efficiency and renewable energy contractors, and working in partnership with community banks and credit unions, we enable more investment in the growing green economy of Connecticut. Through financing programs like CPACE, the Green Bank PPA, and the Smarty Loan, we reduce the burden of energy costs on our families and businesses through the deployment of clean energy. Working together with our partners, we have been successful. Since our inception, we have enabled nearly $1.7 billion of investment in Connecticut's green economy, leveraging $1 from public resources into mobilizing $7 of private investment. This investment has generated nearly $90 million in state tax revenues from individual, corporate, and sales taxes. We have helped create over 20,000 job years while reducing the burden of energy costs on over 40,000 families and businesses through the deployment of clean energy. We have helped avoid the emission of nearly 6 million metric tons of greenhouse gas emissions over the life of the projects and avoided the emissions of local air pollution that is improving the public health of our citizens. And as a result of this social and environmental impact, Connecticut was awarded the prestigious Innovations in American Government Award in 2017 for sparking the Green Bank movement. But why do we do it? Brian, tell us why.
So why have we created the Green Liberty Bond? Because climate change is real and there's so much more to do. Here's a picture of a wildfire in California in 2019. There were nearly 8,000 fires that year, burning over 250,000 acres with 5 fatalities. Here's a picture of a wildfire in Australia. There were nearly 6,000 buildings destroyed from those fires, burning over 46 million acres with 33 fatalities. It is estimated that over 1 billion animals have been killed and some endangered species driven to extinction. This is the devastation of Hurricane Harvey in 2017, which caused $200 billion of damage and 77 fatalities, with the majority of the damage in Texas. Hurricane Maria in 2017 caused $90 billion of damage and over 3,000 fatalities. We must learn to care about each other more. And of course, we felt it too. This is Hurricane Irene in 2011. Here's a man helping someone else wade through the coastal flooding, which caused $17 billion of damage and 49 fatalities in the mid-Atlantic and Northeast. These are just a few of the heartbreaking examples of the reality of our climate crisis. But there's hope. Experts have been suggesting for years that increased investment in clean energy deployment can help. And green bonds have the potential to increase investment in our state, across our country, and around the world to confront climate change. $255 billion of green bonds were issued globally in 2019, with U.S. issuances of about $50 billion. About 60% of the green bond proceeds were in clean energy, renewable energy, and energy efficiency. The Climate Bond Initiative believes $1 trillion a year is in sight. This slide shows an article from Forbes magazine speaking about the importance of green bonds. Green bonds can solve our climate crisis. What is interesting about this article is that it not only cites two of the preeminent energy companies seeking to confront climate change by reducing greenhouse gas emissions, but it also highlights the Connecticut Green Bank's award-winning asset-backed security issued last year. Let me turn this back to you, Rudy, to say a little bit more about the findings of some innovative marketing research you led. Rudy?
Thanks, Brian. With green bonds on our mind, we wanted to learn more about our Connecticut residents to understand the local market for green bonds. A year ago, the Connecticut Green Bank, working with Great Blue Research, a Connecticut firm, conducted a survey of Connecticut residents to understand their level of interest in green investment. We surveyed families that had already demonstrated their interest in green technology by installing rooftop solar PV systems on their homes. We also surveyed everyday families that hadn't installed solar. They were simply randomly selected. We asked them, if you were interested in investing in green projects, what types of green projects would you support through your private investment? We can see on this slide that recycling and waste reduction is the #1 green investment of interest, with clean water and solar PV projects coming in at #2 and #3 respectively. In addition to knowing about the type of green projects families would support, we wanted to learn about their current investments. We wanted to not only understand whether families were making investments in stock portfolios, 401ks, or other funds, and over 85% of respondents were, we also wanted to understand their knowledge about investments available in the market. Over 60% of respondents believed that they were knowledgeable about investment options in the market, including interest in purchasing mini green bonds or lower denomination bonds whose proceeds are used to support green projects. As we began to analyze the responses from the survey, we discovered that lower denomination bonds, these bonds that are $1,000 or less, became more attractive to more families or more accessible for investment based on household income. The $1,000 denomination category is shown in the center of this chart. This research helped us design a bond we believe will be of interest to investors who want to confront climate change. Brian, back to you.
So in honor of the 50th anniversary of Earth Day, the Connecticut Green Bank has created the Green Liberty Bond, a type of green bond whose proceeds are used to invest in projects that confront climate change in Connecticut. Beyond providing families and businesses with access to capital to finance clean energy improvements on their homes and buildings, the Green Bank is now issuing bonds so that families can invest in green projects for others in their community to save for the planet. A Green Liberty Bond is a green bond that has 3 specific features to it. First, the use of proceeds from the bond must go towards projects that confront climate change and create jobs in our communities. These can be projects that mitigate greenhouse gas emissions, like clean energy, for example, or projects that help society adapt to the impacts that climate change is causing, like coastal resiliency projects, land conservation, and more. Second, modeled after the Series E war bonds of the 1940s, the bonds must be able to be purchased by everyday citizens through smaller denominations, no more than $1,000 denomination. More than 85 million Americans purchased Series E war bonds, totaling $185 billion back in the 1940s, or about $3.25 trillion today. And thirdly, because we want more and more citizens to buy green bonds, there must be consumer protections embedded within the bonds. So these bonds are required to have independent certification and verification that the use of proceeds are being invested to confront climate change. A Green Liberty Bond is simply a category of green bonds, with the focus being to provide citizens with another way to invest to confront climate change. Now let me turn this over to Bert Hunter, who's going to give us more details on our first Green Liberty Bond. Bert.
Thank you, Brian. Good evening, everyone. You know, it takes a team of dedicated parties to bring the Green Liberty Bonds to the market. And we have brought together a team of the leading thinkers and doers when it comes to issuing green bonds. Bob Lamb has been our creative financial advisor from Lamont Financial Services. Bruce Chudwick is our steadfast bond counsel from the firm of Shipman and Goodwin. Al Quintero, Brad Friedman, and the team are the senior managers of our first issuance of Green Liberty bonds. Should have mentioned that they're from Ramirez Co. Eric McKean, Barry Gottfried, and the team from Stifel is the co-manager, bringing a strong retail investor marketing presence to the green bond issuance. Our underwriters are supported by their counsel, Kutak Rock. The Bank of New York Mellon is our trustee with experience in lower denomination bonds. DNVGL is the independent engineer with considerable experience in solar PV. Climate Bonds Initiative is the independent certifier, and Kestrel Verifiers is the independent verifier of the Green Liberty Bond. With that, I'll pass the presentation over to Eric McKean of Stifel, who will provide an overview of the bond issuance before we get into some of the details of the structure, which will be reviewed by Michael Yu, Director, Clean Energy Finance for the Green Bank. Eric, over to you.
Thank you, Bert. For this first Green Liberty Bond, the Green Bank will be issuing approximately $16 million in par. The bond proceeds will be used to pay costs of issuance, fund the Special Capital Reserve Fund, and refinance the Green Bank's expenditures related to its residential solar incentive program, which we'll discuss on the following slides. We plan to have the first order period to buy the bonds on July 14th. This order period will be for individual or retail investors. On the following day, institutional investors will also be eligible to buy the bonds. As discussed previously, the minimum denomination that can be purchased is $1,000. Interest earned on the bonds is federally taxable, but tax exempt for Connecticut income taxes. And the last highlight to mention in this overview is that the bonds received a single A rating from S&P. Now Michael Yu, Director for the Green Bank, will continue to discuss the core details of the financing. Michael, over to you.
Thanks, Eric. So on slide 24, this covers at a high level how SRECs fit into the clean energy landscape and this transaction. The foundation lies with our Residential Solar Investment Program, or RSIP, which has provided upfront incentives to thousands of solar photovoltaic systems installed throughout Connecticut. This is a diverse fleet with different installers and ownership structures. Some are homeowner-owned, some are third-party owned through leases or power purchase agreements. But the common factor is that the Green Bank has helped defray the costs of installation through our incentives. In exchange for taking our incentive, when the panels produce clean energy, the Green Bank obtains a renewable energy credit. So every megawatt generated results in the creation of a SREC. And what do we do with that credit? Well, we've entered into 15-year master purchase agreements with Eversource and United Illuminating, Connecticut's two investor-owned utility companies. This is a fixed price contract, in this case, $48 per SREC. So on a quarterly basis, we take what the fleet has generated, create the associated SRECs, and sell them to utilities. And this will continue for the entire 15-year term of the tranche. Please refer to our offering statement online for more details about the SREC creation and revenue generation process. By purchasing SRECs from the Green Bank, the utilities are helped to comply with their clean energy goals and Connecticut's clean energy goals. And the revenues generated by the SRECs are used to help support RSIP incentives as well as cover administrative and financing costs associated with this tranche. And this is all a statutory program that goes until the earlier of when we deploy 350 megawatts or 2020, whichever comes first. On slide 25, we have a quick snapshot of Tranche 3. It consists of over 4,800 systems, aggregating to about 39 megawatts of capacity. They're about 2 years old, the panels, which is still quite early in their expected 20-year plus life, but it gives us nice seasoning in that we can iron out any glitches that sometimes occur in that first year of operation. We've also broken out the ownership structure, so you can see which percentage is homeowner owned versus third party owned, as well as which percentage of the systems fall in Eversource or UI territory. Although on that last point, I'll note that regardless of the territory breakdown physically, the MPAs provide that Eversource purchases 80% of the SRECs and UI 20%. Turning to the security for the bonds, we have the SREC-derived revenue from Eversource and UI, and both these off-takers are investment grade, and they're both permitted full cost recovery as it pertains to these SREC purchases. And the SRECs supporting this bond issuance are those in our third tranche, which was created last year. And as I mentioned earlier, it's 4,800 systems at $40 per SREC, and we expect it to generate about $25 million of revenue over the life of the bonds. But notwithstanding these, what we think are high quality SREC cash flows, the ultimate security for the bond issuance is the Special Capital Reserve Fund, SCARF, which will be funded at the maximum annual debt service to cover any deficiencies and will be replenished by the state should there ever be a draw on that reserve. And this funding is deemed appropriated, which means there's no additional need for legislative action for this to occur. On slide 27, I've mentioned the MPAs already, but it's worth going over some key highlights again. They've been vetted and approved by Connecticut's Public Utility Regulatory Agency, PURA, and permits full cost recovery for the utilities. And every year, the utilities purchase a tranche from us, and that's the 15-year contract with the fixed price. Tranche 3 is again the $48 per SREC, and we're already seeing revenue flow from that contract, which comes on a quarterly basis. Please go online again and refer to the offering statement for more detail about the MPAs and the associated obligations. On this next slide, the transaction diagram, there's two key components. The gray area is the creation and revenue generation from the SRECs themselves. So up at the top are the system owners, whether it's homeowner owned or third party owned. They're generating clean energy, which is then turned into renewable energy credits. The Green Bank takes those SRECs and monetizes them with the utilities under the MPAs, and then the utilities remit payment to a trustee-controlled collection account. The trustee will then send the funds to pay the note holders with any residuals flowing to the Green Bank. And then as additional security for the transaction, the state SCARF will be a backstop should the SREC revenues be insufficient to service the principal and interest payments. Online in the offering statement, there's a detailed walkthrough of the relationships of all the parties. So please take a look there. At this point, I'll turn it back over to Bert to walk through the flow of funds.
Thank you, Mike. Here we have an overview of the flow of funds. The complete description can be found in the preliminary official statement. On a quarterly basis, as and when received from the utilities, as Mike just explained, the trustee will deposit these amounts into the revenue fund. From these amounts, the trustee, after settling its own fees and expenses, will pay into the interest account and the principal account of the debt service fund amounts sufficient to make the requisite interest payment and principal payment coming due. Then, if any is needed, the trustee will then apply amounts to the Special Capital Reserve Fund, or SCARF, necessary to make the total on deposit in the SCARF equal to the SCARF requirement, which is equal to maximum annual debt service, or MADS for short. Note, at the closing, as Mike said, the SCARF is funded with bond proceeds in an amount equal to MADS. Next, the trustee will apply any amounts required for the redemption fund. And finally, if there are any amounts left, the balance is to be placed in the 2020 SREC Economic, Energy, and Security Fund, which ultimately gets transferred to the Green Bank. With that, I'll pass the presentation over to Brad Friedman of Ramirez Co. to walk through the projected annual revenues and bond financing details. Brad?
Thank you, Bert. This slide presents 3 solar energy production scenarios of P50, P90, and P99, and the corresponding projected debt service coverage under each scenario. P measures are a statistical estimate of how often, given variances in weather and system performance, solar production will exceed that value. For example, P90 means that for each year, 90% of the time, generation is expected to be above the forecast, and 10% of the time, generation is expected to be below the generation forecast for such year. The Green Liberty bonds will be sized to provide at least 1.15 times debt service coverage, assuming P90 production of the solar panels. Turning to the next slide, we can see the preliminary 15-year amortization for the bonds. The bonds will be fixed-rate bonds with principal due on November 15th and interest payable semi-annually on May 15th and November 15th, commencing this upcoming November. The bonds will have an optional par call provision in 10 years on November 15th, 2030. Interest from the bonds is federally taxable, but exempt from personal income taxes of Connecticut. Finally, these bonds will be certified as climate bonds by the Climate Bonds Initiative. And now I'll turn it over to Brian.
Thanks, Brad. Certifying that these bonds are truly green was important to us because we know it is important to you. Working with Kestrel verifiers, we have ensured that the bonds meet the Climate Bonds Initiative standard for zero carbon renewable energy resources, solar photovoltaic. CBI is the gold standard in assuring bond proceeds have the intended climate impact. We are the 23rd, both the latest as well as the smallest programmatic certified CBI issuer. This means that any of our bonds that finance or refinance solar photovoltaic is CBI compliant. This is a special designation. The deployment of residential solar PV in Connecticut creates a lot of societal benefits. Many of these social and environmental benefits are consistent with the United Nations Sustainable Development Goals. By increasing investment in clean energy for low to moderate income families, we reduce the energy burden on our most vulnerable communities. By displacing polluting sources of energy with zero emission renewable energy, we improve the air quality of our state, helping create healthier communities. By increasing and accelerating the deployment of clean energy across the state, we advance Connecticut's green economy, creating important jobs in our communities while confronting climate change. Let me turn this over to Al Quintero for the wrap-up on timing and how you can purchase a Green Liberty bond. Al?
Thanks, Brian. So you have in front of you our financing schedule. And as you can see, a week ago or so, we posted the POS, which is a document that contains all the information being presented here and in detail, and information regarding the state and the Green Bank in particular. We are looking forward to July 14th for the retail priority order period. On that day, retail investors will come and get bonds on a first come, first served basis, basically putting them ahead of institutional investors in terms of access to the bonds. We, of course, are trying to maximize accessibility to the retail investor. On July 15th is the day on which we'll actually set the prices for the bonds. That's the day where you actually will know what the final rate on the bonds is, which will reflect the market at that time. And the bonds will be delivered to investors on July 29th into their portfolio. That's the date of closing and delivery. Next slide. And first step for investors is, of course, to get notified, to go and sign up at greenlibertybonds.com to learn about the bonds and to access the POS, again, containing all the information we have described here. Also, if you don't have a broker, you can find a broker, open up a brokerage investment account to be able to place the order to buy a bond. You can, of course, use your existing broker as well. And lastly, make the purchase. Purchase Green Liberty bonds in $1,000 denominations and save Save for the Planet. Listed at the bottom of the page are the key contacts for information and to open up accounts at Ramirez & Company at 855 Ramirez and at Stifel. Please pay attention to those numbers and names if you need additional information. And now I'd like to turn it back over to Brian.
Thank you, Al. Connecticut has a rich history in terms of innovation. From the fundamental orders of Windsor, Wethersfield, and Hartford, serving as the model for the U.S. Constitution, being an innovator in pioneering wind turbine technology in Coventry during the Civil War in the mid-1800s, transporting the first and only president in an electric vehicle in Hartford in the early 1900s, leading the nation in the promotion of war bonds at the Bushnell Theater in the mid-1900s, to hosting the governors and premiers of New England states and Eastern Canadian provinces in Westbrook that led to the first subnational climate change plan in the early 2000s. It is only fitting that in the spirit of innovation, the state that created the nation's first green bank launched the Green Liberty Bonds to provide citizens in Connecticut and our fellow Americans across this country with another mechanism to confront climate change. Thank you all for allowing us the opportunity to present you the inaugural Green Liberty Bond. Let me turn this back to Rudy. We're happy to take any questions you might have.
Thank you, Brian. Thank you to all of our presenters. As Brian mentioned, if you have questions, please enter them in the question box in the go-to window. We did have a couple come in already, and I think, Brian, that these are questions that are right in your wheelhouse. The first two sort of go together. What is your definition of clean energy? What is the Green Bank's definition of clean energy? And why issue green bonds in this way?
So the definition of clean energy for the Green Bank is statutorily determined. So here in Connecticut, that means renewable energy as we all think about it, wind, solar, landfill gas to energy, small run-of-the-river hydro. In Connecticut, it also means fuel cells because we manufacture fuel cell technology. It also includes financing energy efficiency projects, supporting alternative fuel vehicles and associated infrastructure, and battery storage. So it's all inclusive of those technologies we think about, those energy technologies that help reduce greenhouse gas emissions. So think of them as mitigation. And Rudy, what was the second question?
And the second question was more to do with why do we choose to go the green bond route?
Oh, great question. So we decided to create the Green Liberty Bonds because we wanted another mechanism that allows citizens to confront climate change by investing in bonds whose proceeds would be used to finance clean energy projects. So we have, over the last nearly 10 years, taken the $30 million of public resources that we receive and turned them into over $300 million of investment in Connecticut's green economy. What we want to do now through Green Liberty Bonds is increase that upfront investment by enabling people to invest in the Green Bank so that we can scale up that level of investment in Connecticut's green economy. We wanted to design a bond that would allow citizens to invest in climate projects that confront climate change. So we created the Green Liberty Bond.
Thank you, Brian. We had a question about will Green Liberty Bonds fund any fossil fuel related projects? So maybe let's speak again to the backing of these projects and potential future issuances.
That's a great question. I think that has to do, so we, in the design of the Green Liberty Bond, so the third element of it, we want to ensure consumer protections by ensuring that the Green Liberty Bonds are independently certified and verified. So if the clean energy technologies do not meet the Climate Bond Initiative standard or the Green Bond Principles standard, then they will not be inclusive of the Green Liberty Bond. So our focus is using bond proceeds to invest in clean energy that reduces the emissions of greenhouse gases.
Thank you, Brian. So I've got a couple of questions that I'm going to turn to Al and Brad and Eric for. I think you guys can anticipate what these questions are going to be like. First, folks are asking that they have accounts with other brokerage firms. Will they be able to purchase these? How do they go about it? And secondly, do we have any information we can tell them about yield or rate of return on these bonds?
Sure, this is Al Quintero, and trying to answer both those questions. Firstly, we will be opening up what we call a selling group for the purposes of selling these bonds to investors, and that'll include firms, sort of the largest and most common firms, whether it be online brokers or various broker dealers that folks might have accounts at. So we think we're going to cast a wide net in terms of folks' ability to buy bonds through their own platforms. However, as I mentioned, you can always contact Ramirez or Stifel directly in order to either open an account or arrange through the opening of an account to even funnel bonds through Ramirez or Stifel into your preferred account. And you'd have to contact each of those firms directly for more information on that. But again, we expect to have in our selling group the vast majority of firms that folks use for their brokerage needs. With regard to pricing, we don't know what the price is going to be. We will not know until the 15th when we set the price of the bonds. The best information we can offer you at the moment is actually a reference point to a transaction that the state of Connecticut undertook about a month ago, where the state sold taxable bonds. And these taxable bonds are priced off of the Treasury curves. So looking at how those deals price, we see that the Treasury curve, the Treasury curve today is the basis off of which these bonds were spread. Today, the Treasury curve shows yields of, let's say, 0.16% in 2 years, 0.29% in 5 years, and then 1.15% in 20 years. If you look at the spreads at which the state priced, in 5 years, it's priced at a spread to the Treasury curve that I just described of 1.75%, and at 10 years at a spread of almost 2%. So you add those two numbers together and you get an estimate of what the state would have approximately been at. That can sort of give you a sense when we come to market in the middle of the month of how the calculation would work for some of the green bond pricing. But of course, as I say, we do not know, nor can we project where rates will be at the time of pricing.
Thank you, Al. We had a question come in that I think Mike or Bert might want to handle on the renewable energy credits and how that works. Question specifically is there a risk that the utilities, will stop buying these credits from the Green Bank during the term of the bond?
So these are, we have a executed contract with the utilities, and it's the contracts have been, the agreements have been reviewed by PIRA and signed off by all parties, and so we have no expectation that they would stop fulfilling their obligations under the contract.
Thanks, Mike. I'm looking through the questions. I think most of the other questions So here's an interesting question. A question about the Green Bank coming to Illinois and being able to sell green bonds there. So I don't know that we can open a green bank in Illinois, but purchasers can certainly buy the Green Liberty Bond in Illinois, right, guys?
Yeah, so this is Brian. So yeah, any U.S. citizen will be able to buy the Green Liberty Bond, but the proceeds will be coming to the Green Bank for projects located in Connecticut. Now there are a number of local and state green banks across the country. We are a member of the American Green Bank Consortium. I believe there are 15 of us at the subnational level, created by states, local jurisdictions, local public utility authorities. So they are out there. I don't believe there is one currently in Illinois. And we're also working on, collectively together, on a national climate bank, where if the federal government were to approve it through Congress, it would provide the capital to states and local jurisdictions to essentially recreate what the Connecticut Green Bank has done here in Connecticut. So take a look, Google National Climate Bank, Google the Invest in America Act, and you'll come up with some of the federal legislation, but also take a look at the American Green Bank Consortium.
Thanks, Brian. We did have a question, a little bit of information, I think, from Al or Brad, perhaps on the, potential risk involved in the transaction for buyers.
Well, this is Al. I mean, the risks are all described in detail in the preliminary official statement, and we urge you to read the preliminary official statement in detail in order to understand those risks. I really don't want to go beyond that. There's of course market risk associated with the bonds. These are fixed income securities whose price will change as interest rates go up, prices go down, etc. That is the key element to understand. Again, the credit considerations are all described via the preliminary official statement, and you heard earlier in the discussion the SCARF, the Special Capital Reserve Fund backing. Those are key points for security purposes.
Thanks, Al. We had a question about potential to purchase these after pricing is announced, assuming that they're not all sold out.
That would be, this is Al again, that would be correct. If they're all sold at that point, you would be looking at a secondary market transaction to purchase the bonds. And your ability to purchase the bonds will, of course, depend on their availability, the willingness of other investors to hold those bonds to sell. But once again, whether it's Ramirez or Stifel, we are looking forward to making a secondary market in the bonds should they become available. So please stay in touch with your broker dealer, and there will likely be opportunities to do so. And the Green Bank, I don't want to speak on the Green Bank's behalf, but this is a program that will continue into the future, we all hope, and thus there will be additional issuances of these types of securities to present new opportunities for investors.
We had a question about is a portion of the principal returned annually or all at maturity?
The bonds are structured as maturities. So it is, if you're buying a bond that matures, let's say in 10 years, you would be receiving interest until the 10-year point, and then finally, in year 10, you would receive the principal.
and this is Bert Hunter here. To be clear, there are 10 serial bonds from 2021 until 2030. So, and then there was a term bond that matures in 2035 with sinking fund redemptions each year in the last 5 years of the bond. So basically, you may pick any or all of those maturities. Correct, Al?
That's exactly right. And if you buy the term bond, then you will be you would potentially have your principal returned to you earlier than the final maturity of the term bond. It is something determined by lot by the trustee. But again, to reiterate, there is not an annual return of principal. It is interest payments for a period of time, at least through 10 years. If you hold a 10-year maturity, obviously, if you hold a shorter maturity, it is until the shorter maturity date.
All right, I'm not seeing any other questions coming in. All right, well, since I don't see any other questions coming in, I think we're going to wrap up the session here. Thank you all for attending. Thank you to all of our presenters tonight. If you have any further questions, please refer to the POS on the Green Liberty Bonds website or contact any of the folks that you see listed on the screen here. Thank you very much for your interest in the Green Liberty Bonds.